Palantir's AI revolution. Can a $25,000 investment turn into $1 million? The $1 million AI bet. Imagine this. You invest $25,000 in a stock today, and in a few years, it grows into $1 million fortune. Sounds like a dream, right? But what if I told you this isn't just fantasy? One AI-driven stock, Palantir Technologies PLTR, has already quadrupled in value over the past year, and some investors believe it's just getting started. Could Palantir be the next stock to explode in value and make early investors millionaires? Or is this AI-fueled hype setting up for a major reality check? Welcome to the Finance Savvy. Hi. In today's video, we're going to explore whether Palantir Technologies has what it takes to turn a $25,000 investment into over $1 million. We'll break down its AI-driven growth, analyze whether it can sustain its momentum, and determine if it's still a smart buy today. If you're new here, welcome to the Finance Savvy. Don't forget to subscribe for more stock market insights, AI investing strategies, and financial analysis. If you have any questions, drop them in the comments. I'd love to hear from you. All right, let's dive into the video. Palantir's insane growth. Can it keep going? If you had invested $25,000 in Palantir at the start of 2024, you would have ended the year with over $110,000. That's a 4x return in just 12 months. Palantir is no longer just another AI stock. It has secured its spot in the S&P 500 and NASDAQ 100, making it a serious player in the data analytics and AI space. What's driving Palantir's surge? The company is thriving thanks to exploding demand for AI-powered data analytics, with major clients including the U.S. government and Fortune 500 companies. CEO Alex Karp is incredibly bullish, claiming Palantir's AI capabilities will reshape industries across the board. But the real question is, can this momentum last? Or is this just a temporary AI bubble? The future of AI, hype or reality? To understand where Palantir is headed, we have to look at the bigger picture. 1. AI is expected to grow at a mind-blowing 36.6% annually until 2030, according to analysts at Grand View Research. 2. Businesses worldwide are pouring billions into AI, seeing it as the future of decision-making, automation, and innovation. 3. Palantir's ability to provide real-time AI-driven insights is making it an essential tool for both the government and private sector. But here's the catch. As AI adoption explodes, competition is heating up. The big risk: will AI spending slow down? Not everyone is convinced that the AI boom will keep accelerating. Recent reports suggest that some companies might be overspending on AI development, and cheaper AI models, like China's DeepSeek AI, are emerging as low-cost alternatives to giants like OpenAI's ChatGPT. This led to a market dip in AI stocks, proving that hype alone isn't enough. Companies need to prove they have a sustainable business model. And that brings us to the big question: can Palantir become a $7 trillion company? For a $25,000 investment to turn into $1 million, Palantir's market cap would need to grow to $6.7 trillion, more than 4,000% growth from today's levels. Well, is that possible? Let's break it down. First, if Palantir continues growing at 20% per year, it could hit that mark in about 20 years. Second, if the growth slows to 13% per year, it would take 30 years. For perspective, today, the world's most valuable company, Apple, APL, sits at around $3 trillion. So, while AI will likely keep fueling growth, expecting a single stock to reach $7 trillion is a stretch, especially with new AI competitors emerging every year. Should you still invest in Palantir? Palantir isn't cheap. It currently trades at more than 60 times its earnings, meaning investors are pricing in massive future growth. Point 1. On one hand, Palantir could continue dominating AI-driven data analytics and see huge long-term gains. Point 2. On the other hand, competition is growing, and AI hype could fade, leading to a potential stock pullback. For short-term traders, Palantir might still have room to run. But for long-term investors, betting on AI alone isn't enough. You need to consider whether Palantir has a lasting competitive edge. What's next? The super micro connection. AI isn't just about software and data analytics. It's also about hardware. And that's where companies like Supermicro (SMCI) come in. Supermicro is at the forefront of AI infrastructure, building high-performance servers that power AI-driven companies like Palantir, Nvidia, and Tesla. So, in our next video, we'll dive into Supermicro's explosive growth and why some investors believe it could be the next AI giant. Final thoughts. Is Palantir a millionaire maker? First point. Palantir has been an amazing stock for early investors, but its future depends on whether AI spending continues at this breakneck pace. Second point. While hitting a $7 trillion valuation is unlikely, that doesn't mean Palantir won't deliver strong long-term gains, especially if AI adoption keeps accelerating. Third point. For now, Palantir remains a high-risk, high-reward stock, so investors should manage their expectations and watch the AI sector closely. Thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to the Finance Savvy for more AI stock insights. Got questions? Drop them in the comments. I'd love to hear your thoughts on Palantir and AI investing. Stay tuned for our next video on Supermicro (SMCI). You won't want to miss it. See you in a few. Supermicro (SMCI), the next AI powerhouse or overhyped stock. The AI stock that could change everything. We just talked about Palantir, PLTR, and how AI-driven stocks are creating insane wealth for investors. But here's the thing. AI isn't just about software and data analytics. None of these AI breakthroughs would be possible without the hardware powering them. And that's where Supermicro (SMCI) comes in. This company is at the heart of the AI revolution, designing the high-performance servers that power AI models, cloud computing, and next-gen technology. The hope: could Supermicro be the next Nvidia? Or is Wall Street underestimating its potential? Let's find out. Welcome to the Finance Savvy. Hi. In today's video, we're diving into Supermicro (SMCI), one of the hottest AI infrastructure plays. We'll break down why AI hardware is just as important as AI software, how SMCI is positioned for massive growth, whether it's a strong buy or an overhyped stock. The hint: if you love stock market insights, AI investing strategies, and financial analysis, make sure to hit that subscribe button. Got questions? Drop them in the comments. I'd love to hear your thoughts. All right, let's dive in. SMCI, the backbone of AI computing. Most people focus on AI software, but without cutting-edge servers, none of this tech would even work. AI boom. That's where Supermicro (NASDAQ), SMCI, shines. The company builds 1. AI-optimized servers that power machine learning models. 2. Cloud computing hardware used by big tech companies. 3. High-performance computing, HPC, solutions for data centers. Think of it this way. If Nvidia is the brain of AI, then Supermicro is the backbone. Wall Street's take on SMCI: undervalued or overhyped? Despite being a key player in AI infrastructure, analysts are divided on SMCI's future. Hint: here's what the experts are saying. 11 analysts rate it as a hold. For say it's a buy, 2 have given it a sell rating. The average price target? Just $62.89, which seems shockingly low given the AI boom. So, what's going on? Let's break it down. The bear case. Why some analysts are skeptical. SMCI has faced several downgrades from major firms like JP Morgan and Goldman Sachs. Here's why. Point 1. Volatility. The stock has seen wild swings, with a 52-week range of $17.25 to $122.90. Point 2. Valuation concerns. Some believe SMCI's growth isn't sustainable and that it's overvalued. Point 3. Competition. Big tech giants like Dell, HPE, and Lenovo are all fighting for AI server dominance. But here's the thing. Wall Street often underestimates disruptive tech companies. And that brings us to the bull case. The bull case. Why SMCI could be the next AI powerhouse. Here's why some investors believe Supermicro could be the next Nvidia. First, AI hardware demand is exploding. AI workloads require specialized, high-performance computing, and SMCI is at the forefront. Second, partnerships with AI giants. SMCI servers are used by companies like Nvidia, AMD, and Microsoft, positioning it as a leader in AI infrastructure. Third, massive institutional investment. 84% of SMCI stock is owned by institutional investors, signaling strong confidence in its long-term potential. And last point, innovation and customization. Unlike Dell or HPE, Supermicro focuses on custom-built solutions, making it the go-to choice for AI-driven data centers. Is SMCI a buy right now? Here's my take. Point 1. If you believe AI hardware is the future, SMCI is a strong long-term play. Point 2. If you're looking for volatility and big potential gains, this stock has room to run. Third point. If you prefer safer investments, you might want to wait for a pullback before jumping in. Supermicro is at the center of the AI revolution, and while some analysts underestimate it, long-term investors could see huge upside potential if demand for AI computing continues to surge. What's next? SMCI's growth is tightly linked to AI expansion, and that means companies like Nvidia, Palantir, and even AMD are all part of the same story. Alert! So in our next video, we'll break down Nvidia's latest AI breakthroughs and whether it's still a buy at its massive valuation. Thanks for watching. So, if you found this video helpful, don't forget to like, share, and subscribe to the Finance Savvy for more stock market insights. Got questions? Drop them in the comments. I'd love to hear your thoughts on SMCI and AI investing. And stay tuned for our next video on Nvidia's AI dominance. You won't want to miss it. See you next time.